The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern Time, and we got markets. A little bit of action in both directions to kick things off. You have the S&Ps just above 3,800. We're trading negative by 7 points on the session. We are coming off the lows of about 3,790 just in the last 15 minutes or so. S&Ps right now negative by 0.2%. NASDAQ 100. Huge week of earnings this week, big week of earnings with basically all the big tech stocks. Microsoft, tomorrow we have GE earnings already this morning, but we get them all, man. We got Microsoft, we have Google tomorrow, we have Meta on Wednesday, we have Apple and Amazon on Thursday. The NASDAQ 100 in the green by about 11 points right now. Check out the action we had from Friday's low to where we were yesterday. You came right into where we were on the Sunday night futures, just above 11,500. We're right near that area this morning. And earnings are going to drive a lot of the action this week, folks. Not to mention the fundamental news we get. We got GDP numbers out there. We get PCE later in the week, and then we have a Fed decision next week. All of it coming at you pretty quickly. Russell, negative by 2 points right now. And how about the Dow yesterday? I was listening to my dad's show, rightfully so. Dow is powering everything forward yesterday in a big way, man. The Dow from Friday's low, how about 1,500 points, man, to the upside from 30,100 to 31,600. We're off a bit this morning, though. The Dow off about 0.33%. Weakest index this morning, you could say. Bitcoin hovering at about 19,300. Crude with some volatility, even in the last few minutes, man. I come on the air. Crude is always rocking, no matter what time of the day it is. 7 in the morning, you're at 83.20. You trade up more than $1. And then just since I came on the air, folks, you had crude drop from 84.56, almost 70 cents. Those would be mammoth new moves normally. But right now, we got about a 5 to 7 minute action. Gold contract, we got some currency action this morning as well. Gold negative by $6 at 16.48. And we got notes and bonds with some higher price and lower yield. Coming up to the highs that we had early yesterday, whether it was at about 7 in the morning, that's where you were. We got the 10-year at about 4.15%. The yield on the 10-year right now, the 30-year is up a full point and 6 ticks. But again, folks, all we're doing is trading back to where we were basically yesterday morning at about 7:30 yesterday morning. Now, you made it all the way down to 109.13. And, folks, if you want to know what volatility is around right now, just check out the note and bond market, man. You're getting full point moves in both directions. I mean, yesterday, we got a move of about a full point from 110.13 almost, I'll say. We were above that point at 2 in the morning, okay? So a real full point. And look at the moves. We get a full point from where we were, let alone you go from 110.15 down to 109.25, right? Then you climb back up, solid 15 ticks, 17 ticks to the upside before collapsing again. Nonetheless, the point is volatility in the note and bond market, and as long as you're getting that type of volatility, man, you're going to get some real volatility in the equity markets, to say the least. Now, even with the bounce we have going on, folks, okay, back to a 15-minute, because that's quite a bounce, man. From Friday's low of 108.26, you make it up almost 2 full points in the 10-year, but you put this thing on a daily, and you can barely see a bounce. We have traded down so low, folks. To put things in context again, the 10-year, putting a little Fibonacci action just from where we were in August, man, you could see a pop right up to the highs we had on October 4th, okay? Maybe, and that's 3.5 points from where we're trading at right now in the 10-year that you could go up, folks. And that would just be a normal bounce, even if interest rates are still on their way upwards. You can't go one way forever, man. And we have been on a one-way trip in the yields, basically, for almost 3 months. August, September, it's October 25th, folks. 3 straight months this thing's been going lower. So don't be surprised if we get some type of reversal action, at least in the short term. We jump over to the dollar index, nearing the bottom portion of that trend line. Again, don't be too surprised, right? This has been quite a run. Now, we just talked about where we were on notes and bonds. Look where we were on the dollar at that time. The dollar was trading at about 105. We make it to 115. Now, a little bit more volatility on the dollar index. We've had some decent pullbacks compared to the yield that we've had. Not really No real decent pullbacks in terms of lower yield. That was a straight run higher to higher yields from August 1st through October. And the dollar, though, backing off a bit with negative 28 ticks right now at 111.70. And you see, even since I came on the air, man, since 8 in the morning, I guess, was really, but look at that sell-off right now from above 112 to 111.70. We jump over to the euro US dollar right now. We're pushing 99. Now, this is a little bit of a break right now. It's at a critical area. We've seen this channel line get tested a few times. We've seen some of the tails make it over that channel line. We've seen a rise back to October 5th when you got above that channel line. You have the euro US dollar right at about 99 right now, well off the lows of 95, breaking above that channel. We'll see if it can hold for the euro US dollar. Pound, GBP, USD, right in the middle of that potential channel line at 113.87. You got to check in on the yen, man. The yen, 15-minute action. So much for the intervention. I mean, I guess they got a point or two on that intervention from 151 down to 149. You were as low as about 145. We had some action Sunday night as well, but you can see how this market just recoils even with some of the intervention going on from the Bank of Japan over there. The yen, 149, man. Remarkable as that puts pressure with a strong dollar on commodities, of course, but the market, it's liking the action right now, man. From 36.41 Friday, we're above 3,800 right now, negative by 5 points on the S&Ps. And let's jump around GM, out with their numbers this morning, and strong numbers. They're up to 38. They're back a bit to 36.93. Conference call began at about 8:30. Seems to be going well. Their numbers were out early this morning at about 6:30 this morning. Jumping over to their numbers. Big third quarter earnings beat, but holds full year guidance steady amid headwinds. Going to be interesting to see how that opens. Usually the market cares more about future numbers coming at you versus what you did in the last 90 days. Getting into the numbers, $2.25 versus $1.88, and they missed slightly, $41.89 billion versus $42.22. And the company expects full year net income between 9.6 and 11.2 on adjusted earnings between 13 and 15 billion. And that's pretty much in line with what they had. Yeah, and they just reaffirmed guidance. Now they're talking about GM CEO said the company reaffirmed its guidance despite a challenging environment because demand continues to be strong for GM products, and we are actively managing the headwinds we face. And we'll see how they open. Market holding up pretty well right now at 38.05. We get some big earnings tonight, man. But they come in pretty strong. They beat nonetheless. I mean, the whole conversation, right, has been about earnings. Well, GM just beat on earnings. What are you going to do for me over the next 9 months for the year or whatever it be? But regardless, they just beat on earnings. And not easy to do in the car business right now. But the thing that goes weird in that car business, almost like the airline business, prices through the roof, right? What are the areas of inflation right now that have been persistent? Cars, it's easing a bit, okay? But airline costs, right? Used cars, even new cars, prices through the roof as those two areas, just huge demand, limited supply. Airlines are flying less routes and making more money. Car companies might be selling less cars and making more money too. We're going to find out if the tech companies are getting it done. We'll go through that. We're going to be coming back after the break, folks. We'll talk to our man Kevin Hincks from TD Ameritrade Network Fast Market. Stay tuned, folks. We got the S&Ps. We're only negative by 1 now. We'll be right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&P futures just negative by 1 point right now, trading at 3807. You get the NASDAQ 100 positive by 30, pushing the overnight highs. We have at about 11,509 right now. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time, fast market from the TD Ameritrade Network right here on Tiger TV. Your host, Kevin Hincks, Tom White. They do an outstanding job of breaking down the market action, folks. They have some great guests. They set up hypothetical trades using options. Earnings season, always a great time to check out the program, and this week is an exceptional one, to say the least. Kevin Hincks, good morning.
I mean, more names coming out with earnings this week than we could possibly cover. Today, Microsoft, Google Alphabet, Visa, Chipotle, Spotify, Texas Instruments. I mean, that's just the highest profile names, but just so many names coming out. This is the biggest week of earnings season. Every single name in the FANG group, with the exception of Netflix that's already out, Tommy. There's a lot going on here, as you know.
It's pretty interesting. It's not much, no places really to hide this week in terms of earnings. We got some great earnings from banks and airlines, and you could say, well, those are the banks and airlines. Those are exceptional cases right now. Everybody wants to fly, and net interest income is through the roof. Not the case this week, man. This is real deal. We're coming into those big FANG stocks. And already this morning, Kevin, I was jumping around. You guys had a great program yesterday. I was listening. I learned that Coca-Cola, they were in the milk business as well, making Fairlife. Kevin, I think I got 2 or 3 jugs of Fairlife in my fridge on a constant basis over the last year with little Tommy here, and I did not know I was buying Coca-Cola products until I watched Fast Market yesterday. So I appreciate that. But Coca-Cola, they're higher this morning. You got GM is higher this morning. You got UPS higher this morning. Pretty decent earnings so far from those 3 at least.
Yeah, throw GE in the mix too. It's really 3M what was the only industrial stock that missed on earnings this morning. It's a bit lower. So pretty good earnings this morning. You know, the market started out lower because I think Europe markets were lower because their new prime minister came out with some pretty dire comments about the reality of what they have going on over there in their economy. So now our earnings are boosting our look today. Let's face it, Tommy, so far earnings have been a pleasant surprise here in the U.S., but like you mentioned, we're getting into a whole different animal coming up here on the horizon. Let's go through Microsoft. Remember, they were the one that said they had major currency issues. Well, the dollar is still extremely high. And how weak is gaming? A lot of the chip sector said gaming has weakened. Well, Microsoft is a big multinational, so the dollar is important and gaming is important. Then Google Alphabet. We did a show all Friday on ad spend and the weakness in ad spend, and you saw what happened in Snap. Is that going to carry over into some of these other social media stocks that get so much of their income from ad spend? We'll find out about that. Visa, how they make their money off swipes and consumers swiping. Let's find out how important the consumer is. How about Chipotle? Remember, Brian Nickel came out a quarter ago and said, the recession that's hitting a lot of lower income Americans isn't really affecting Chipotle's customers. So we'll see how they're doing. So there's a lot going on here, Tommy. It's like trying to eat an elephant, right? You got to do it one bite at a time. So we'll go through them all. If you look at this week in its entirety, it looks overwhelming.
Listen, you did an outstanding job. Folks, that's why you got to check out the program, Fast Market at 12 o'clock. I was jumping through all the charts there, Kevin, as you were going over the equities. Some real pullbacks, as we all know. Chipotle, that's a pretty strong chart, though. As you said it, man, we're up to 1958 last year. But, boy, you came into this year and you had a quick drop-off. But this thing's back to prices that we were trading at almost beginning of January for Chipotle versus the rest of the market. So not that bad compared, especially as I jumped through all those charts, Kevin, as you were talking to them, talking about them. Chipotle, yeah, well off the highs as we know. But versus some of those, Microsoft, man, you pulled back a 618 of that entire move that we had during COVID. You've talked about it before, Kevin, saying, and it almost ties into, you just made the case in terms of the equities. There's so much going on. Then we get some economic numbers later in the week. Then we got a Fed meeting next week. We've talked about before, and you've said, and I love the take on it, to try and stay near term, right? Try and stay current.
Right.
So with that in mind, do you go almost day by day here? Is this week, the tech stocks are all combined to some degree, but you just laid out the different cases they have, man, versus ad spend, versus gaming, versus Amazon later in the week, and Apple and their whole ecosystems that they control. So do we just put basically economic numbers kind of like to the forefront, to the backside, and then focus on the earnings? And then when we get to GDP and PCE later in the week, we'll focus on those. And then you go to the Fed. Do you just take it one at a time? How do you approach a week like this where we get all the earnings, and then, man, we come into the Fed's favorite inflation statistic. We come into GDP, and we come into a Fed meeting itself. How do you approach something like that?
Yeah, you try to stay in the immediate and trade right now. Remember, you've got a consumer confidence number coming out here in about 35, so that'll affect the overall market. But you can't take your eyes off that, and it's coming up. So you look at expectations. Tommy, right now, the expectations for PCE year over year, both in headline and core, are both higher than they were a month ago. So, the market has taken a big relief rally off of the perception that the Fed's going to raise and then taper, or raise and then lighten some of their tone. How do they do that when the inflation numbers both here and in the UK keep going up? They're not going down. They're not stabilizing. They're going up. So that's a big problem on the horizon. And the expectations for this week's higher, in terms of the core year over year. So, GDP, they're looking at the consensus 2.3%. Doesn't sound like a weakening economy to me. So I think the Fed has big problems both in their movement and in their messaging, Tommy, because it's sinking in with the investor or the overall American consumer, Tommy. This is it's going to be interesting. Let's put it that way.
They're great questions. I wish I had the answers, Kevin. I'll hopefully callers out there for the rest of the program, call in and let us know. How do they do that? Because I was listening to your program, Kevin, yesterday, and I agree. It's like you stay current, you stay with the data. How does the data line up with that when you have the jobs number, the economy? Everything is pretty great right now, except for inflation, it feels like, in terms of where we are, in terms of the unemployment numbers, even the market itself, that's reacting to inflation. But boy, these numbers we keep getting, man, whether it was the CPI numbers the last 2 months, boy, they are just consistently beating in terms of inflation staying high. So I don't know how they do that either. But that's the beautiful part, man. We're going to get to find out where we go. And with that in mind, Kevin, I know you already talked about some of the equities I'm sure you may be talking about, but what's coming up on Fast Market today at 12?
Yeah, these shows write themselves on days like this, Tommy. So we'll look at Google Alphabet, we'll look at Chipotle. Like Folio will do a presentation on Chipotle, and then we'll finish with Microsoft. So big names today, big high-profile names today.
Kevin, I appreciate you taking the time, man, on a busy day as we come into the opening bell. We'll be watching at 12 o'clock, and we'll talk to you tomorrow, man.
Have a great day, Tommy. Thanks for having me on.
You too. Folks, tune in every trading day. This week especially, check it out. We got so much earnings going on right now. Kevin just did an outstanding job talking about them. We got a VIX right now trading under 30. Pretty interesting, right? You trade lower, but boy, the VIX persistent when you look at on Thursday, folks, okay, the VIX was trading under 30. Well, where was the S&P at that point? The S&P was chopping around between 3,700 and 3,740. In that time span, we've seen the S&P go from 3641 up 180 points. And we're still sitting at about 30. What's it telling you, man? People are still paying for premium for protection, even with the market at 3,800. Stay tuned, folks. We'll be back for the opening bell. Teddy Kegstad has just announced a live webinar coming up for subscribers to his newsletter, The Tiger Forex Report. Wednesday, October 26th at 4 p.m. Eastern Time, Teddy will be hosting a live 60-minute webinar, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report newsletter. In this 60-minute webinar, Teddy will be discussing a full breakdown of the markets that influence currency pairs, as well as applying those variables to individual currency pairs, how to evaluate trading scenarios for risk versus reward, as well as a live question and answer session. Sign up now and gain instant access to this live webinar coming up, as well as a month subscription to Teddy's Tiger Forex Report, which comes with a 30-day money-back guarantee, so you have nothing to risk. Don't miss out on this live webinar event with Teddy Kegstad, Wednesday, October 26th. Sign up now for the Tiger Forex Report at the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We open and we tick higher right now with the S&Ps opening up in the positive by 4 points. You check out where we were coming into the opening bell at 8:30. You've gained about 15 points in the S&P. NASDAQ 100. We're breaking above the highs we had last night. You're breaking actually above the highs we had on Sunday evening in the NASDAQ 100. Whoops, by 0.6%. The Dow lagging a bit after leading yesterday, Dow negative, the only index right now in the negative I got on my charts right now. You jump over to crude. $85. There's some action for you, man. Crude. $2 down, $2 up, all in the span of about 6 or 7 hours, man. Just that market. Remarkable right now. What's been going on in crude as we sit at about 85.01, kind of right near where we were near the highs of yesterday. You got a spike to 86 potentially on that. We got some action everywhere right now. They're talking about it then. There's a gold spike for you up to 1658. Let's see what's happening with currencies. Because guess what? They're running the show, folks. There's your currency action. 112 down to 111. Look at that. Just since 8:15, the last hour and 15 minutes, we got the dollar pulling back, man. We might have some moves going on. The market loves that, man. S&P's up by 8 right now. We take a look at the daily. It's an important area, folks. Now, listen. Technical analysis is an art, not a science. If it was a science, you can program it into a computer, and people do, okay? And it's becoming a science, but to a degree, it's an art, man. Because if it was that easy, you just plug it into the computer, let it do the work, turn it on, collect the profits, right? Where exactly is this line? Well, you could set up a linear regression. That would be science, and maybe that's the closest to it, okay? But nonetheless, you're right near that line right now. A pullback to about 111.22. You see the action we're getting today. Now, we just pulled back from 112 to 111.22. But you put things even back on a daily, right? And look at the action we got, man, in terms of that daily. In terms of where we are, the tail that we have, we were just at almost 114, folks, and we're trading at 111 on the dollar. Let's check out the yen. Whoops, there's the U.S. dollar, Canadian dollar. Let's check out the yen real quick, because that's always an interesting one. Put it back to a 5-minute chart to see the action. Yeah, I mean, that just dropped a whole full point as well. We jump over to the euro, U.S. dollar. There's a spike for you, breaking away. When I was talking about this coming on the program, right at about 9 o'clock, we were at 98.7. We might get parity. We might get above parity. Look at that break. Decisive break out of that channel line on the euro, man. 99.31. Boy, this is interesting stuff. As we come into earnings season, we come into a Fed meeting. Next week, we come into GDP numbers at the end of this week, and we come into personal consumption expenditures at the end of this week. Huge numbers in a big way. And as Kevin said, you know, they had a great program yesterday, folks. If you haven't checked it out, check out Fast Market. And he was talking about, you know, this acceleration. Now, part of this does have to do with a possible journal article and just reporting in general that the Fed is now planning potentially to raise by 75 basis points and then begin to taper, maybe, and maybe that means 50, 25 and done, okay? Market loved that idea. But here's the thing, and it's kind of what Chairman Powell said a while back. The data is going to drive this. That's a great plan if the data lines up. But every single month, the data is not really lining up. And boy, it seems like forever I've been talking about, well, geez, what happens if in 3 and 4 months we're not where people say we're going to be, right? And it seems like no matter what happens, 3 or 4 months, every time it rolls around, we just got the numbers for September, and they were nowhere near where we were supposed to be. Kevin just walked you through them, man, in terms of the hot numbers that we're supposed to get for inflationary tendencies still on a month-over-month basis, right? So how does that happen? How do you do that? Well, one way you could do it, you could get a weaker dollar, but how does that play out? Because if we have the Fed on a hiking cycle, they could get some competition from the ECB, from Europe, right? You get some high yields in Europe. The dollar demand is not as strong compared to some of those European countries, right? If there's yields that exist over in Europe, there'll be some demand for euros to buy those yields versus right now there's so much demand for dollars to buy the yields that we have going on in U.S. dollar denominated yields. But I don't know how that plays out because we got a tall order ahead of us, folks. And before I jump into some of the earnings numbers, I want to jump around to an article that I was reading this morning. Let me pull it up. I got to find the one we're off here. And this talks about it. So the Fed is losing billions and wiping out profits that funded spending. Now, we all know that numbers do matter, okay? And the Fed was making a lot of money at one point when those numbers were very low. But guess what? They're the ones that are paying the money right now. And it's not as worrisome on our accord, which it will be, though, because this is going to turn political. And political may shape the future of how these things run and the pressure that will mount on the Fed accordingly, okay? But as the bond market is enduring its worst sell-off in a generation, you talk about central banks bought a lot of bonds, and they are worth much less now, okay? So they bought all those bonds, and how much are they going to lose? The Treasury is going to see a stunning swing. Now, they received $100 billion from the Fed last year. $100 billion the Federal Reserve sent to the U.S. Treasury. This year, it's going to be about a loss of $80 billion by the year end that the Fed is going to have for a negative, and then you may have to issue debt to raise money to pay for that, okay? Now, for a fully functioning economy like the U.S., not really a worry in the short term, all right? And I'm talking about $80 billion. I get the overall scope of things, okay? But, and this puts it well, and it's something you want to look about a little bit longer term. I love how Kevin talks about, and that's why I brought it up as a question, saying stay short term, man. We got too much in this market right now. If you're worrying about this, you're thinking longer term. You can have it in the back burner, know it's there, okay, on a longer term basis. Because, yeah, this is going to become a big battle, folks. Of course it is. We got the U.S. Treasury that's going to be supporting the Fed to the tune of $100 billion a year. You can bet on the fact that's going to come in a political debate. Yeah, so the problem with central bank losses are not the losses per se. They can always be recapitalized, but the political backlash central bankers are likely to increasingly face, okay? Now, getting into the numbers of the ECB versus the U.S., the ECB is going to have a tougher deal no matter what, and Europe's going to have a tougher deal no matter what. And I don't know how they're able to hike to the degree that they probably need to, okay, as they are going to start quantitative tightening, even as they're preparing for the economic outlook to darken, as many are aware, all right? But then, guess what? You talk about getting into the Bank of Japan. When do they start? And then you have Republicans, okay, that are expected to probably take the House, at least, right? Is that it? They're going to take the House, right? I think. I get lost. I don't pay attention to politics as much as I should, but they're coming, man. We got the midterms right now. But they're going to have one of the chambers probably. They're probably going to be voicing disapproval of that type of money. It's probably good for a burgeoning democracy to have that debate, folks, because, yeah, after paying as much as $100 billion to the Treasury, it's going to lose about $80 billion on an annual basis. You're telling me that's not going to come up? And that's going to make the task even more difficult, right? Boy, it's a tough one, man. But I don't know how they pause unless we get inflation under control. But we get some economic numbers later this week. We get some earnings this week. Stay tuned, folks. We'll take a look at Microsoft when we get right back. Stay tuned.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. And we got the S&Ps right now up by 10 points, right near the highs, man. Made it up to 38.23. We're trading at 38.19 right now. The highs we had yesterday, for some reference here, zooming in on that high at about 3 p.m. Eastern time, 38.22. So literally just jumping around at that price point on the S&Ps. Okay, let's take a look at Microsoft. We get some Microsoft earnings tonight after the bell, trading a little bit lower. We get the NASDAQ 100 up by 76. That's 2/3%. You got Microsoft trading down by about 0.2% right now. Google is also after the bell. They're positive by 0.2. We'll jump to them next. Microsoft right now. Kevin talked about it, man. Gaming. Some of those chip stocks really, I think, who was it? Somebody missed by $1 billion in the gaming sector alone for their revenue. Microsoft, and this is what I was talking about. When you look at some of the equities, right? Like we're going to talk about Chipotle as well. And folks, they're a sponsor, okay? I would talk to Kevin Hincks 5 days a week if I could, whether they were a sponsor or not, and I'd still watch Fast Market and I'd use Thinkorswim. I know I'm biased, man, but I talk about it. Check out the program, especially this week. We always air it on Tiger TV, but you can also check it out right in the Thinkorswim application as well. You can check it out in there. We always want you watching Tiger TV, but it's kind of cool. You pull it up right in the platform there, Trader TV, out there as well. But boy, when I looked at those charts, man, Microsoft, you talk about a pullback, right? Chipotle, nothing like that. Microsoft giving back. You went from 132 to 349, and you basically pull back a 618, man. You make it to 219.13, okay? The 618 was about 215.34. But the reason why I say you make it back to that area, okay, and tying back to, don't be afraid to make things an art, not a science, folks, okay? As in, you pull back to a nice little consolidation area in Microsoft here. You pull back to an area of about 220. That's an area. You were at 216.38 by July of 2020, and you didn't break out of it until about January. That was a 6-month consolidation around that 220 area, right? That's what I like to see, where you pull back to a Fibonacci area of retracement that also correlates to a potential consolidation area in the past. And, you know, just use just the eye test sometimes, folks. All right, that's a nice little consolidation that it had towards the end of 2020. You pull back to that area. Now, with that in mind, though, they are big in gaming, man, and gaming's been a big problem, and we'll see how that goes. But Microsoft, you're trading at 246, you jump over, you're talking about an $11 move priced in for their earnings. So not bad, less than a 5% move. Not as big as some companies. We'll pull up Meta. I think Meta's pushing like a 12% move right now, priced in, rightfully so. Microsoft's got a lot of very consistent, reliable revenue when it comes to recurring revenue for their Outlook products, et cetera, versus business revenue. Always nice to have business revenue a little bit more consistent, probably a lot more consistent than consumer revenue on a recurring basis sometimes. Businesses have budgets that get spent. Now, you talk about consistency, though. We're going to jump next to Google. Now, so Microsoft is out after the bell tonight, okay? Google also out after the bell tonight. Google, about a 5% move, just more than that right now. You're talking about a $5.45 move priced in for this equity, trading at 103. Google makes it to about the 50%. So we saw Microsoft. Now, see how everything differs? It's kind of cool when you go through them one by one here. Because Microsoft pulled back to a 618, which correlated to a nice consolidation area from about July to January. Google really didn't have that. I mean, they were a one-way trip, man. You had a slight consolidation, but really you see the difference on their chart. Google from 50 to 150 accelerates higher. We pull back to a 50%. But boy, they are in ad spend, and ad spend could be in trouble, folks. They control the world, though, through YouTube and through Google. And I've said it before, in the long term, YouTube, we watch so much YouTube in my house, folks. Myself, we air Tiger TV on YouTube, and it's all free, right? We're able to broadcast Tiger TV to hundreds of viewers, thousands of viewers a day, and we do it for free. You're able to watch Tiger TV, thousands of you a day. You do it for free. And my household, man, we watch Coco Melon. We watch everything out there, and it's all free. And meanwhile, we're talking about rising costs for everything. So in the long run, man, Google's a great product. You're getting it at about a 33% discount from where this thing chopped around for the better part of 6 months, from August all the way through to February or March, almost 7 months. And Google's looking at about a 5% move as well. So we get both of them after the bell. Now, we also get Meta. Meta shares 134.41. You talk about a pullback. I don't have to put a Fibonacci number on there, man, because you actually trade below the pandemic of 136. How is that possible, right? But never say never, folks. That's the key of everything. Never say never. There's a term that I like to use, and when there's a probability that's very low, you say, what's the probability of that happening? You say, well, I don't know what it is, but it's greater than zero, right? And if it's greater than zero, you should have a plan just to make sure if that outlier probability comes into fruition. Because let me tell you, folks, you run a scenario enough times, if you're a trader enough times, things are going to happen that you say are not common. Now, I've had the experience of running scenarios millions of times, literally. I played a lot of online poker in my late 20s. I was playing, if you haven't heard it before, I've talked about it, I was playing 10 to 20 tables at the same time. I would still play some big tournaments. You know, maybe you have that big tournament. I was playing basically exclusively online. I would go to bigger live tournaments in person, whether it's in Vegas. I won one trip in London. It was beautiful. Online poker was taking off at that time. It was at its prime. 2009, 2010, somewhere around there. And so I would play 10 or 20 tables at the same time. I had tracking software. And what would happen is that it would allow me to play about 10,000 hands a day sometimes. So I could easily do 1 million to 2 million hands a year at my peak. And I was playing cash games on that level. And I was seeing so many hands that, folks, the variant swings that are possible, even over large samples, and the things that happen, you're going to see it all play out. The numbers don't lie, okay? If a probability is what I often see is, right, you see it in sports all the time. And I get it because it's sensational, but somebody has like a 5% chance comes through or something like that, right? There was just a lot of talk in baseball. They have all these new cool statistics in baseball. And Aaron Judge, who's just a phenomenal athlete, man. I am not even a huge baseball fan because it's so slow. I'm a big Red Sox fan, of course. Rays, they struggle to get anything going. They're such a good team with such a small budget. I'm jumping all around here. But Aaron Judge, he would hit. They track how fast the ball goes off the bat, and they track the trajectory of that ball. And so what they'd say is Aaron Judge hit the ball at 108 miles an hour off the bat at a 22-degree angle, and 96% of those balls that did that went for a home run this season. And everyone would say, that's insane. And what they don't realize is you're pushing almost a 1 in 20 chance. A 1 in 20 chance, folks. That's going to happen at least once a game where somebody in that game, because guess what? How many at-bats are there in a game? There's got to be 9 times 3 at least, 27. That's 54 at-bats for both teams. And they're complaining that you see maybe a 1 out of 20 occur, or point is, it's all going to happen, folks. Don't say it can't happen. Manage your risks, all right? Don't say this market can't go to 3,200. Don't say it can't go to 4,800. If we learned anything during the pandemic, man, you do not know the future, and it can always be coming next. We got geopolitical tensions out there at record levels, folks. And back to poker as we come into this. We got one more segment, folks. We'll talk about some of the other equities. We'll take a look at Amazon and Apple when we come back. But I've seen it all when you run the numbers, folks. I've lost with 4 aces to a straight flush. 2 aces, flop 2 aces, guy hits a straight flush on me. Things happen, you know? You run those numbers enough times, they're going to happen. Play the probabilities. If a probability is greater than 0 of occurring, make sure you know it can happen, because they happen all the time. Stay tuned, folks. Markets catching a bid. We're going to talk about the dollar that's moving when we get back. Stay tuned, folks. We're right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Quite a market indeed, as we got the S&Ps right now up another 0.9%, folks, and you are 200 points above where we were trading at on Friday morning at 36.41. You check out the NASDAQ accelerating 1.4% higher. How about the NASDAQ up 700 points from where you were trading on Friday morning? Mammoth moves across the board. Dow up about 0.4. Dow was leading the way yesterday, a little bit of a lagger, still up 0.4 today. You get the Russell up 1.8%, up to 1786. Crude 85.47 right now. We jump to the dollar index, man. Currencies running so much of what's going on right now. The dollar index, folks, there's a dive for you to 1094. They're talking about it in the den, folks. If you haven't checked out the Tigers Den, get in there. We had some great action going on over the weekend, which was really cool to see. You can use it on your desktop. You can use it on your mobile. We use the Discord application, which has been a great application for the den and really allowed it to flourish. And what do we have? As it's a perfect segue, we have our man Teddy Kegstad. We'll talk to him tomorrow. But, boy, you better sign up, folks, because he's going to have a webinar, and I can't wait to go to it myself tomorrow at 4 o'clock. For subscribers to the Tiger Forex Report, where he's going to walk you through what is behind the Tiger Forex Report newsletter. He's going to break down the markets that influence currency pairs, how to apply those variables to individual Forex pairs, how to evaluate trading scenarios for risk versus reward when talking about setups, question and answer period. It's going to be 60 minutes. It'll be 4 to 5. It will be archived, folks. For subscribers to the Tiger Forex Report, you can head on over there, subscribe. Comes with a 30-day money-back guarantee, folks, so you have nothing to lose. $97 a month if you decide to keep it. If not, you get it for 28 days. You get the webinar. And currencies driving so much of this action right now. You see the dollar index down to 110.90. It's not stopping, man. As action everywhere, we jump over to the dollar yen. Dollar yen right now, 147.86. Yeah, all the other currencies loving that when we get dollar weakness. And we'll finish it up with Amazon. Catching a charge up more than 1%. As I talked about, they'll be out with their numbers on Thursday, and the big dog Apple. How about that? Up 1.25%. Quite a market, folks. S&P's up 37. Thanks for starting your trading day with me. Stay tuned, folks. We got live programming all day. It's going to be an interesting one. Basil Chapman, he's up next. Steve Rhodes at 11. Fast Market at 12. Larry at 1. David 2. Tom O'Brien live from 3 till 4. Talk to you tomorrow, folks. Stay tuned for Basil. Have a great Tuesday.